Imagine slashing hundreds off your monthly mortgage. But at the cost of skyrocketing home prices, the Fed just pulled the trigger on rates. Will you cash in or get priced out? Stick around. This changes everything for real estate investors. Good day. On September 17th, 2025, the United States Federal Reserve made a pivotal move, cutting its benchmark interest rate by 1/4 percentage point. That's 25 basis points, bringing the federal funds rate to a target range of 4.00% to 4.25%. This marks the first rate reduction of the year, ending a 9-month hold steady amid cooling inflation and emerging labor market concerns. According to reports from CNBC, the decision passed in an 11-to-1 vote by the Federal Open Market Committee, or FOMC, signaling broad consensus despite one dissent from new Governor Stephen Moran, who favored a more aggressive half-point cut. Fed Chair Jerome Powell described the move as risk management to address a softening job market, where unemployment rose to 4.3% in August, the highest since late 2021, and recent revisions revealed nearly 1 million fewer jobs added than previously thought. Reuters corroborates this, noting the cut was driven by rising unemployment risks, particularly among black workers, and a declining average work week, with Powell emphasizing the need to prevent further labor market deterioration. The Fed's updated economic projections, known as the dot plot, indicate further easing ahead. 9 officials project the rate at 3.5% to 3.75% by year's end, suggesting 2 more quarter-point cuts in October and December, while one outlier pushes for even deeper reductions to as low as 2.75%-3.00%. USA Today reports that inflation remains somewhat elevated, but the priority has shifted toward employment stability, with Powell noting stable prices and a strong overall economy as supportive factors. CNN Business highlights market reactions. US stocks ended mixed, with small-cap indices like the Russell 2000 up 1.2% on borrowing cost relief hopes, while the 10-year Treasury yield dipped below 4% briefly. Now, for real estate investors and homeowners, this cut is a game changer. CNBC explains that while the immediate impact on mortgage rates is minimal, as markets had already priced in the cut, a series of reductions through 2026 could gradually lower 30-year fixed rates from their current average of around 6.13%, the lowest since late 2022. This makes borrowing cheaper, potentially unlocking pent-up demand from buyers sidelined by high rates. US Bank notes that home prices, which stabilized after 4 years of gains, could see renewed upward pressure as affordability improves, especially with inventory at 5 months' supply, the best in nearly a decade. Virginia Realtors Registered Trademark outlines 5 key impacts. First, stronger buyer demand, particularly for entry-level homes, as monthly payments drop by hundreds. Second, potential refinancing boom for the 80% of homeowners locked into sub-4% pandemic-era rates, freeing up cash for investments. Third, increased construction activity, boosting local economies and jobs. However, warns Bankrate, this could exacerbate housing shortages, leading to bidding wars and higher prices in hot markets, with median home prices already near $404,500. CBS News adds that while the Fed doesn't directly set mortgage rates, its signals influence the 10-year Treasury, which drives long-term lending, so expect gradual relief, not overnight miracles. For investors, lower rates mean better ROI on rental properties through easier financing, but timing is key to avoid overpaying in a heated market. In summary, the Fed's September 17th cut signals a softer landing for the economy. But for real estate, it's a double-edged sword. Opportunity for growth, risk of inflation in prices. As Fox Business reports, the weakening labor market outweighed stubborn inflation, setting the stage for more cuts. Watch for October's meeting. Stay informed. These shifts could redefine your portfolio. If you're in real estate or investing, now's the time to act. Click the link in the description below to discover your home's current value in this evolving market. It could be worth more than you think, or time to buy low.
your ultimate hub for real estate insights, breaking news, entrepreneurial wisdom, investing strategies, and self-development hacks. If you're ready to expand your mind and stay ahead of the game floor, you're in the right place. Subscribe now. Your future self will thank you.